Thank you so much for being with us, Kim. So how are you feeling about the market? I mean, we look at what the breakdown. We're seeing a really great market today, a broad-based rally, financials, industrials, energy, material, across the board. Real estate has been great, at least for this month, for a few days that it's been. How are you feeling overall?
I'm feeling that I always like it when the market's up, but maybe we're a little bit ahead of ourselves. I mean, let's just remember what all investors are supposed to do. What we're doing is buying tomorrow's cash flows at a discounted rate today. And it looks like, because a lot of companies have pulled guidance for the next, 9 months, we don't really know what they're going to do. So those cash flows are very uncertain, and we're all taking a good enough guess. And we might be guessing a little ahead of ourselves. So I think I'm a little worried about the market being able to hold these levels and grow further from here. But I'm always somebody that looks for a good bargain at the same time.
Right, I understand that. And you got to go with what you believe may do well, regardless of maybe some pullbacks or what people are actually doing. And I know technology is in your sights. Tell us more, Kim, about tech and why you're picking some tech names.
Sure. Well, the first thing you can do in uncertain times is extend your timeline. So what I'm doing is I'm looking 3 to 5 years out, and I am looking for longer term trends, not things that are just going to work, like the American Eagle story that you had on just before that, that might be a shorter term turnaround or not. But I'm looking way far away. So the two trends that I'm looking at are companies that are probably going to continue to have a lot of people working from home, at least part-time, and 5G. So those two things are very tech involved. And I think that investors can look at these areas and kind of look for bargains when they happen and invest in those longer term trends.
Right. And I know you have so many great names. Microsoft, for example, the clients moving to cloud and some of these names. Tell me a little more about that one.
Sure. Well, Microsoft, people hate it somehow, I think, either as an investment, but it's done really well, and as a company, just because they are kind of a big monolithic presence in our lives. But here's the secret about Microsoft. It can do a whole lot and charge you relatively not a whole lot. And by moving a lot of its clients, both small and large, to the cloud, they've been able to smooth out their cash flows and invest in some of the products. So Microsoft Teams is getting a really big boost from work at home. And although Slack has a devoted following and has lots of good attributes, I'm looking at Microsoft saying over time, they will probably outperform Slack both on a monetary basis and a technology basis because they have so much capital at their command. And I think that they'll learn from this experience, listen to their clients, and just make that online presence with Teams even better than it started out of the gate, which is pretty good. It's a pretty strong product.
Yeah, and it's interesting. We talk about the rally that people love to hate because we've been clawing our way up even through last year. Everybody thought it was long in the tooth. And Microsoft is, sort of a good old steady Eddie. Its high was 190. It's not that far off. It's at 184 right now. So I see what you mean. It's not one of those super sexy names, right? That we talk about, like Zoom, for example. Other names that you have on here, you talk about the competition, right? Slack and Zoom for Microsoft, but also the continuing trend of work from home. Is there anything that I've missed before I move on to the 5G category that I do certainly look forward to talking more about over the next 5 or 10 years, I'm sure? Final thought on some of the other work from home names. Those will continue, right?
Right. I think they will continue. I would look for less sexy things because they have more room for growth. Anything that's in the spotlight probably is getting all of its due and more. So kind of go away from that, but look for things that will enhance work from home in those smaller companies.
Yeah, and I know you've been watching Xilinx closely pertaining to 5G. So often when we talk about 5G, I ask people, like, do you like the mobile carriers? Do you like the satellite towers? Do you like a name like Apple or Verizon? You know, what is it, you know, that you like? And you like Xilinx in this category. Why?
Sure, because regardless of if you're a satellite carrier or a regular telecom carrier, you are probably going to have to add capacity whenever 5G actually comes to fruition. The devices are just going to spew out so much data back to a server somewhere that somewhere there's going to have to be more and more routers and kind of industrial grade servers out there handling all this data. And that's what Xilinx makes. It makes chips that go in remote installations that connect back to a optical network. So, and it doesn't have to be an optical network, but I'm just using that because that's a really big pipe, right? So if you think there's going to be more data, then Xilinx will likely benefit just because of its specialized chips. And it's it is in a lot of the global telecoms out there. So it's kind of a subtle way to play 5G.
Yeah, yeah. As we began this conversation, you said that you like a bargain, right? So I guess you're trying to cautiously pick what might be the winners. As a chief investment officer, it's not easy, right, to try and navigate through these kinds of markets. Do you expect volatility to continue? You don't want people to just take out their money and sit on cash, right?
Right. Now, I think you need to look for volatility, because even though the Fed is dumping its resources into markets, and that what we've seen from the last 10 years has given markets, smoothed them out, taken away little of the volatility, there's still a lot going on in the world. Let's, even if you just look at America, a lot going on, and we think volatility is going to happen. So what I think you should do is put half of your money to work, and if you're putting new money in, and leave the other half for maybe those dips, and always have your price. Always know what you think is an acceptable price to pay that has a margin of safety in it for a stock that, when it's going on sale. Because when the markets are going down, that it really feels scary to buy, because it's going down and you go, well, is this it? Is this the bottom? Here's the thing. People don't know when the bottom hits. They just don't in the moment when you're buying stuff. So what you have to do is have that acceptable price target or price limit, I guess, and just dive in, hold your nose and buy and say, this is a good company. 3 to 5 years from now, it's going to be okay.